Good morning, sir. Good morning, classmate. Our report is all about development of capacity bias, credit, and collection policy. What are credit and collection policies? A credit collection policy is a set of clear, written instructions that specify the terms and circumstances for delivering items on credit, customer qualification criteria, collection method, and action to be done in the event of customer delinquency. While a collection policy is a set of procedures used by a company to ensure that accounts receivable are paid. The collection policy, like the credit policy as a whole, should be written and properly enforced. Why is it important to have a credit collection policy? Account receivable, along with a cash inventory, is one of the company's most essential short-term assets. Your cash flow will be healthier if you can convert your accounts receivable more reliably and effectively. Consistency is one of the most crucial aspects of a successfully recovering money due to you. Your team will be a lot more consistent, effective, and efficient in collecting overdue accounts receivable if you have a documented process that your staff follow and document all actions and communication along the way. A well-written and comprehensive credit collection policy will ensure departmental continuity in the event that key people leave the credit department, assist in ensuring that all clients are treated equally, ensure that credit decisions are made consistently. New sales associates and the credit and collection staff can utilize it as a teaching tool to guarantee that procedures and execution are consistent between the credit department, sales, and management. Your policy can be as broad or as specific as you want. Just remember that in order to protect your cash flow, arming your employees with knowledge and predefined account receivable best practices and procedures is the best way to ensure that they always know what to do in certain situations and can react quickly and confidently to resolve any issues or answers any questions. Keeping your credit collection policy up to date. It's important to update your collections policy on a regular basis to ensure that it remains relevant and effective. Although it is advised that this be done once a year, a recent Credit Today poll found that nearly half of businesses evaluate their policies significantly less frequently. The following are some of the study's key findings.
Study case findings are they said 90% they review adjust their policy every 2 years. Rather, 13% said they review and adjust their policy every 3 years. And 15% reported they only review and adjust their policy when they need to. 12% said other, which really makes you wonder the last update took place. SMB or small, medium, and big businesses are by far the worst offenders of neglect when it comes to the collection policy. And these are the companies who should be the most invested in formulating an account receivable strategy that brings in the cash flow that they need to grow their businesses. Credit and collection principles and practices to adhere and to abide by the business. Number one, credit is earned a privilege, not a right. Number two, the financial security, sustainability of the creditor is the principal consideration rather than attainment of sales or credit objectives. And number three, Credit must be granted only to a person possessing the positive traits and attributes of trustworthiness, integrity, capability, and capacity to earn, save, and repay one's financial obligation. And number four, credibility, collectability, and protection of the credit granted must be given expeditious positive attention action. Number five, financial soundness, operational effectiveness, efficiency, and security of the creditor must be balanced against risk, diversification, expansion.
In addition, with credit and collection principles and practices to adhere to and abide by for business, debtors must not be given a credit much more than what they can reasonably effectively repay. The balance risk of credit granting for growth and expansion, realistic credit limits and term be set for the target market within geographical areas of operation. Then credit must not be extended to one who is habitual delinquent. Kasi nga naman, di ba? Number 9, each credit application must be properly be credit investigated and evaluated. So properly documented, recorded, expeditiously registered with a proper government agency in applicable cases, effectively and efficiently. Like for example, like the collateral ng title, so dapat ipa-ROD siya. Then, number 10 is credit grant must be motivated and principally by reason of the collateral or security offered. It's the collection of the credit granted arising from being a going concern, which develops positive capacity rather than acquisition of the collateral or security. Next, we have set a workable system for monitoring, evaluating, and expeditious action and perceive and or actual credit danger signal shown by debtors. So, mapagmatsyag tayo dapat. Then, number 12, the credit collection and sales operation must be in a positive synergy to attain overall objective. And number 13, decisiveness and expeditiousness in collection effort on all front of collection venues effectively undertaken within and without the creditors' organization to prevent, avoid, and minimize bad debts. Number 14, a bad compromise is better and pragmatic than a long, contentious, expensive litigation. So, ika nga, a peso in collection is better than zero. And number 15, don't cry over spilled milk. So, take your loose. Write off bad accounts and learn from negligence. So we have here an example of credit and collection policy of our cooperative. So under in our manual of operation under section 18, the credit procedure, then the loan we have the loan documentation, we have the loan briefing, we also have credit and background investigation. So dito papasok yung 5 C's like the 5 C's are first, the capacity, which is the borrower ability to pay his obligation based on earning potential. So the business experience, educational background, so dyan papasok. That measuring capacity to pay. Number 2 is the character. The general reputation of the borrower, personal habits, family history, relationship, and anything that has bearing on his willingness to honor pledges and obligation as based on personal interview of friends and people close to the borrower. And number 3, condition. Assess the business and economic climate of the project. Next, we have the co-maker, or the ability and capacity of the co-maker to pay in case the borrower fails and shall undergo the same credit evaluation procedures. And the last, but not the least of the 5 C's are the collateral. So, it is the last thing to be considered, which shall not be treated as payment, but rather a guarantee for the payment of loan. So, ika nga, this is the last resort. Then, we also have the credit process. And under Section 9, we have the past due. So, kailan ba natin masasabi na past due ang isang loan? So, all loans are considered past due if amortization is not paid upon due date. Then, members who are willing to settle account but with no enough fund, the cooperative have the option to apply remedial management. So, dyan papasok ang loan management which is under Section 10. So, first is the collection process. Then, we have the charging off. Next, we have the restructuring. We also have the renewal of loans. And lastly is the writing off. So, we also have the application of payment, which is stated in Section 11, that payment must be distributed or allocated based on the following. First, legal cost, if any. Then, penalty, if we also have, and the rest. And finally, if may nabilin pa siya, will go to the principal. So these are the references of our reports. And the member of our group, which is the group 1, is yours truly. Next is Miss Annabel Branya. Then we have Miss Delia Lumbay. We have Cinderella Isaling and Miss Kamaydan M. Parason. So thank you for listening. Have a good day.